The Commissioner General Uganda Revenue Authority, John Musinguzi, was among the many stakeholders that have appeared before the Parliamentary Committee on Trade today morning. While the discussion centered on the newly announced 10% import duty and 18% value-added tax that was slapped on the imported concentrates used to mix poultry feeds, Musinguzi was put to task to explain the pay-as-you-earn increment from 30% to 40%. He says the tax will not affect everyone except those whose salaries are in a particular bracket.
We are trying to make easy payment of payee for people who have more than one job. The law allows us to collect payee based on the total income.
According to Musinguzi, this is meant to ease the process of filing returns by the people with more than two jobs.
So what we had was a template that would not allow someone who, when collectively they are earning enough money that would put them in the highest band of 40%. So we had a template that was limiting them to 30%. What we've done, we have amended that template to allow them declare the income from multiple sources as long as it qualifies for the highest band to pay the highest rate of 40%.
URA is mandated to collect nearly half of this financial year's budget funds. This comes at a time the tax base is increasing. The Commissioner General revealed that the Revenue Register has close to 3 million taxpayers.
We're expanding the tax base, but also when you get people in the register, they don't all immediately begin to pay tax. There is a process you take them through as you educate them, as you teach them how to file, as you assess their incomes. There is a full onboarding program. So some of them have gone on the tax register, but they've not yet started contributing their fair share of tax.
The recent 10% import duty and the 18% value-added tax slapped on the imported concentrate feeds for poultry is meant to ensure that URA meets its targets. The importers have since protested the tax, saying it will increase the prices of poultry products. These want Parliament to revise the levy.
But again, you've heard from the Committee of Parliament, when Parliament gives guidance on this matter, it is an administrative decision. They can decide that the tax will be effective going forward, or so it is, for the letter of indemnity, it is what is administratively prudent on our part, because we cannot continue breaking the law after knowing that there is a gap, and we can also not charge. So we just ask for a letter of undertaking.
The Trade Committee is expected to conclude its report by the end of next week. Ramson Muhire, CTV PM Edition.